As we can see, the Dow took a big nosedive today, but after trading down 220 some odd points, it came back up to where it closed above the 50 and right close to the T-line. Now, the obvious is the T-line's been acting as support the whole way up. This could be a reversal, or it just could be pulled back to the T-line. That we won't know until we see how they plan on opening this market tomorrow. Obviously, if they open it lower, the T-line is being breached after a candlestick sell signal, a bearish engulfing signal, which means they'll probably take it down to at least the 20 or possibly all the way back to the 200-day moving average. The S&P 500 closed right on the T-line in an indecisive trading day, which makes it still in a questionable state. Makes it more easy for us to understand what the market will do tomorrow because we have the doji sitting right on the support level. If it opens positive, the simple rule of the doji tells us they're going to move it in the direction of how they open it. A positive open, they're going to keep moving it up. A lower open, time to close out long positions. Expect a pullback at least to the 50-day moving average. The NASDAQ also gave indications that the selling wasn't rampant today in the fact that when they opened it and took it down, they finally finished up closing or trading above where they opened it, which meant there were buyers in the market today, even though it had opened much lower. The fact that we can see the graphic depiction of what's going on in investor sentiment makes understanding whether there was buying or selling sentiment in the markets today much more clear. Today's market also demonstrated once again why patterns such as our fry pan bottom is a viable pattern even in the light of a very dismal market. A fry pan bottom is usually investor sentiment that's building up and doesn't give too much credence to whether the market is up or down. As we can see, our recommendation on BWEN was still positive on this day based upon this investor sentiment building up, even though the market was down over 150 points. And as can be seen in the PEIX chart that we recommended last week, the fry pan bottom breakout is still having bullish consequences once again, even though the market was trading off. The benefit of candlestick signals and patterns is that they are the true evaluation of what's going on in investor sentiment, and they will usually persist in that sentiment in spite of what market conditions are. That'll be it. We'll see you in the chat rooms.